Is margin interest from options trading tax deductible? Have you ever wondered if the interest you pay on margin loans for options trading can help reduce your tax bill? This is a common question among traders, and understanding the rules can save you money. Margin interest is what you pay when you borrow money from your broker to invest in stocks or options. The tax treatment of this interest can be a bit tricky, so let's break it down. For tax purposes, margin interest is classified as an investment interest expense. You can deduct this expense, but only if you itemize your deductions on your tax return. If you choose the standard deduction, you cannot claim this interest. So, what does it mean to itemize? It means you list out your deductions, such as mortgage interest, medical expenses, and charitable contributions, instead of taking a flat deduction. Now, let's talk about net investment income. This includes taxable interest, ordinary dividends, and short-term capital gains. If you have long-term capital gains or qualified dividends, you might need to make a special election on your tax return to include them in your net investment income. When it comes to options trading, the IRS has specific rules. If you use borrowed funds to buy taxable investments, you can deduct the margin interest. However, if the options you trade do not generate taxable income, the margin interest may not be deductible. For example, if you sell options and realize short-term capital gains, the margin interest is generally deductible. But if your options expire worthless or generate tax-exempt income, that interest might not qualify for a deduction. It is also important to note that if part of your margin loan is used for personal expenses, that portion of the interest is not deductible. Only the interest related to taxable investments counts. When you calculate your deduction, you do not need to track margin interest for each specific trade. Instead, it is based on your total net investment income for the year. However, keeping good records is wise in case the IRS wants to verify how you use the margin interest. If your margin interest exceeds your net investment income in a year, you can carry over the excess to future years. This means you can use it to offset future net investment income. To claim the deduction, you will need to file Internal Revenue Service Form 4952. This form helps you calculate your allowable investment interest expense deduction. The result from this form is then entered on Schedule A as part of your itemized deductions. In summary, margin interest from options trading can be tax deductible if the options generate taxable income and you itemize your deductions. Always keep accurate records and consult a tax professional to ensure you are following the rules correctly.